The broadcast is now starting. All attendees are in listen-only mode.
Well, good evening, ladies and gentlemen, and thank you for being with me today. I can tell you it's a glorious day in the South Pacific. Beautiful blue skies. The ocean is very blue. The trees haven't stopped growing. We've had so much rain, it's all turning into it's like a tropical rainforest where I am here on the Gold Coast, which is wonderful. And it's a great pleasure to have you with me today. So it's good morning to our friends on the east coast of Australia. Good afternoon to those of you across the ditch. Now, I take it you're hearing me all right. Would somebody please type into the question box that you can hear me all right? That we have volume, that this is all happening. Jean-Philippe is with us from the Philippines. He's doing a tutorial at the moment, and he's right on the ball to tell me that he can hear me fine, so that's grand. Okay, we've got a really good roll-up today. Lovely to have you all with us, of course. Alan is the tutorial guys with us. Anthony down in Sydney's with us. Let me get my glasses to work a bit better here, and a new one, Pam. Wonderful to have you with us, my friend, and welcome, David J. In the middle of doing a tutorial. He's had a bit of a medical procedure during the week, David. I hope that's all gone well for you and that you're feeling great. Let me know when you're ready for our next tutorial session. George is with us. Mr. Gregory Palladini, of course, is with us. Jean-Philippe, Jeff's with us. Justin down in the Hunter Valley, one of the guys who did an interview not so long ago about how his Danielcode tutorial has gone. Wonderful stuff. Marcel up in the coal country in Quebec is with us. Wonderful to have you. Marcel's been a member of Danielcode almost forever, I think. Mark L., who has been with us forever. There's no party without Mark, of course. Good to have you, my friend. Miles is here. Milton's here. Nathan's here. Norm's here. Good to have you with us. Peter Mack, who's not a day trader. Many other Peters. And, of course, Peter, who's really Pietro, glad to have you with us today, my friend, and Sean down in Adelaide. Well, today is going to be very different for you. I'm going to give you some presents today, and I hope that you'll bear with me that to do this webinar, I have to look at two computers at the same time. So if I'm a little slower than normal, it's not old age, it's simply having to shift my eyeballs at high speed. So bear with me, and I hope you enjoy what you're going to see today. I think it should knock you out. I think you should be mesmerized by it. It's extraordinary stuff. It's something that I see every day, and no one is more surprised by the magic of Danielcode than I am. But this one really, I think, of course, we will post it tomorrow. Terry will post it for us once he's processed the video. And I really think this is something you might want to take and show your friends because in an uncertain world, the certainty of Danielcode time cycles is astonishing. And today, we're just going to simply take those time cycles, which those of you who've done tutorials understand. Oh, hello, Anthony's just arrived from Chicago. Anthony DD used to be a broker, now a private trader, great Danielcode supporter. Wonderful to have you with us, Ant. What we do is we simply take the time cycles that are created from Daniel's code and we slap them straight on the chart as price. We don't make any other change. And if you think about it, that can only work if time and price are the same thing on different axes. And I know that sounds a bit of a mouthful, but it's true. And when you do a tutorial, I prove it to you. Most of you who are with us today know that what we're doing is we're taking time cycles from Daniel's code, and we're using them not only as time cycles, but also as price targets. And the most important part of all of our trading is, when we're talking about price, is target recognition. When I was discovering all this stuff, and I was so amazed by it. I said, look, you can't go out and say you found this stuff and it rules the world unless you can prove it. So I set a very strict burden of proof. I said that we have to have bars, either at the high or the low or the close, finding these Danielcode time cycles and price targets within 0.1% of the relevant price. Not 1%, 1/10 of 1%. And what's really interesting is back in the 12s, 13s, 14s, the teens, gold, which I did a lot of the research on, was trading in the 1100 to 1200 range. So 0.1% was 1.1 points or 11 ticks, 10 ticks to a point in gold. What's interesting is that as the market's now exploded and gold is now trading at multiples of that number, it's still finding the targets within not 0.1% of its present price, but 0.1% of its 2014-15 price. It's extraordinary, but it's real, and I'm going to show you all of that today. Okay, so let's get moving here. You know that markets are rational, orderly, and sometimes predictable. And today, I give you this particular slide every time we have a webinar. But today, you're going to just see how extraordinarily rational and orderly markets are. And a big player today is going to be US Treasuries, the biggest single market in the world. And as you know, getting bigger all the time. The amount of money that the last sequences of presidents have pumped out is truly extraordinary. The amount of money sloshing around with Treasury and selling their bonds and what have you, it is an extraordinary thing. But you're going to have a chance to look at some Danielcode time signals today, and that is the best trading system I've ever seen or heard of. And you will only learn about trading time at a Danielcode tutorial. You'll learn a lot about trading price from the Danielcode website, but trading time is taught only at the Danielcode tutorials. We started this at our last session, a free consultation. If you're interested in markets, you're interested in learning more, you're interested in becoming an elite trader, or you just like to talk about markets, let me know. And I'm happy to set up a go-to-meeting session so we can have a chat to each other. And I would be delighted if you have any questions, you'd like to have a talk about your trading or anything else of great interest, like horse racing or yacht racing. Wonderful stuff that keeps me, well, it has for many years kept me going, and I'll be happy to talk to you about it. So let's have a look at this. Why are we having a correction in equities? Well, those of you who follow the Danielcode will remember that on the 14th of March, I posted this chart, and what it showed basically is that we had a 59 cycle starting from the March 2009 low, and that had given us this amazing COVID big bars, the big bars you can see there, the COVID bars, and we've just continued that on. We're running from the 2007 high, the 2009 low, and also the low after the .com high. Little mini crash low there, looked exciting at the time, I can tell you. Look at what this chart's done since. It's absurd, isn't it? And we had one of those 59 cycles expiring, and had to, it expired on April the 8th this month, this year. So whenever we see major time cycles expiring, what do we think of? We think of a probable change of trend. And that change of trend, it tells you nothing about quantum. It only tells you about the time. And that's why we're having a correction now. But this was apparent I actually posted it for you on the 14th of March, and it's been running along quietly since the 2007 high in October 2007. Great stuff, isn't it? Okay, let's keep going. So this is the S&P yesterday. What I wanted to point out to you, Danielcode people who've done a tutorial, you know this, most of our clients don't. You've heard me say that the time cycle for all markets is 6.21 days. And the long lamented W.D. Gann liked to say, if you are worthy, I will tell you the number. And if you became worthy, presumably by spending enough money on one of his courses, or more than one of his courses, which were very, very expensive, about the price of a new Buick back in the day, I'm told, he would tell you the number, and the number he'd tell you is 7, which is wrong. 7 is not the vibration for markets. All markets vibrate at 6.21 days. And you don't have to get too hung up about the 0.21 after the decimal, because we've got 104 weekends that are not on the chart, 12 or 13 federal market holidays in the US that are not on the chart, and they combine to be 32.7% of all bars. So there's getting pretty close to 33%, if you like, which is a third. There are a third of all the charts, all the days on these charts are not on them. They're missing. They're not here. So we should have a systemic error of about 1 in 3. That's what the absence of those bars is telling us. Amazingly, Danielcode manages to overcome that in a dramatic way. But what I wanted to show you is that once you know that the market is, the vibration for all markets is 6.21 days, and we don't have to worry about the 0.21, then if we're interested in 6 as a major vibration, it is in fact minor time, then we should be interested in 12, which is times plural, and 3, which is a half. And some of you will remember Daniel's code says it shall be for time times and a half. So what you can see on this chart, I've just slapped it on for you, made it really obvious, is a highest high, lowest low of the last 12 bars. Those of you who've done tutorials know that markets will often exhaust into extremes at highs and lows. And the 12-day cycle is pretty much an extreme for a balanced market. So we have a rule that if you get a market expiring and its high or low is at one of the 12-day blue lines, and the close is reasonably close to one end of the bar or the other, there's a high probability that that's an exhaustion bar, and you are authorized to take profits at that point. So for those of you who gave back all our lovely equities profits today, you should remember this at least for future reference. Okay, let's move on, and here we are. We've got the next one. This is the NASDAQ. Exactly the same thing, folks. You can see it's happened before. If you go back 4 bars, you can see that big outside bar that stopped at the blue line around the outside, closed very close to the low, and that was an exhaustion move. The market rallied 3 days from there. And a short version of that's happened today as well. Here's the Russell, same thing, down to the blue line, closed near the low. Hasn't got to be at the low, but at least better than 50%. The closer the better. It's valid to take your profits and say thank you. Okay, now today, folks, I'm giving you some gifts. And these are pretty special gifts. And what they are come in 2 parts. The first is your own private gold mine. And the second is an old friend who is now a new friend. And this is the best friend you will ever have, because this friend is the talking market. Now, you may think that is a very weird thing to say, but I can assure you markets are talking to you. Markets are trying to tell you what they're doing. Markets exist to create your wealth and health and happiness. And you will find, as I do every day, a winning trader is a much healthier trader and a much happier trader. You're a pleasant person to everyone around you when you've had a nice, decent whack of winning trades and a big pot full of the lovely lolly has jumped in. This happens all the time. This is not something that you should think is a big deal. It should be your daily expectation. You have your own private gold mine, and you can go and dig up some gold whenever you like. And you don't have to stockpile it. It'll be there forever. It's never going to leave. It can't be stolen. It can't be lost. It can't be mortgaged. It's just sitting there for you. And the best friend you will ever have is going to talk to you about it. And that friend is going to talk to you and tell you what she or he, the market, is doing. Now, I know you'll think that's completely cracked, so please bear with me as we get through this session today, and you will be amazed. And it happens because Danielcode actually is the DNA of markets. Some of you were actually at a tutorial in Los Angeles a fairly long time ago now. And we had a young gentleman there who worked for NASA Jet Laboratories, and he was a research analyst. And halfway through me telling him that 59.3 in particular, which is times plural in the Danielcode lexicon, is the DNA of markets, he ran out of the tutorial in a great hurry. And when we saw him later that evening, we always have a drink and something to eat after each session of our tutorials. I said, "Are you all right? Were you feeling ill or something?" "No," he said, "no." He said, "I was in shock, and I had to run back to the office to check it out. But 59.3 is the rotational rate of the spiral in human DNA." So he told me. So it's not overstating the matter to say Danielcode is the DNA of markets. All we're adding, as you're going to see as we go along, is simply a bit of Daniel's sauce. We take the time cycles from Daniel, we convert them into price by simply not doing anything to them. We just change them from a vertical line to a horizontal line. It sounds absurd, but it's, as you'll see, perfectly perfect. Okay, so here we are. Here's your private gold mine. Think of all the wonderful things that are in there in my gift to you today. Its value is limitless, self-sustaining, handles its own maintenance. You don't have to go out there doing any digging. It can't be stolen, so it doesn't have to be insured. It handles its own security, so you don't have to pay Brinks or someone else to keep it safe. It will be yours forever. It never runs out, and you can gift it to your family. And that sounds to me like pretty much a perfect gift, and I have enjoyed it for many, many years. I hope you will too. And the new friend that I'm gifting to you today is an old friend. A few of you know, if you've done a tutorial, you've met that friend, but for most of you, it's likely you haven't met him or her before today. And this is a wonderful friend. She's available to chat anytime. She never gets tired and never sleeps. She's there ready to talk to you all day, any day. If you like, and I do, she will go with you on your travels and on your holidays. She asks nothing of you, but offers her gifts endlessly. She exists to make you happy and wealthy. If you listen for long enough, folks, you may even become wise. And she is a great conversationalist. She loves to talk and will talk only to you. Those are the gifts. Before we get there, let me show you what's been going on in this wonderful trading world. This was a members chart. You remember these are posted for members twice a week and sometimes more often if we get really big bars. Sometimes they will be updated every day. But you can see here this members chart that was posted on the 6th of April. Have a look at the number down there a bit below where the chart is, and it says 115 correct 26, that little arrowhead, you can see that that's probably called a correct. You can see that number 115.26 sitting there from the 6th of April. Here was the update, the 11th of April. This was on the weekend. Have a look at it. You can see the bottom number next after this chart, 114.29. On this day here, which was Wednesday, look where that close was, 115.26. Where was the close of that big outside bar? 115 correct 25. One tick variance. That's it. That's what markets do all the time. And what it's doing is it's saying to you, I know these numbers and I'm tracking them. I know these numbers and I'm tracking them. And the market tells you that with the red lines, the black lines, the blue lines. She will continually say, I know these numbers and I'm tracking them. Or she will sometimes say, not this ratio, try a different ratio. So if you look at this chart from here, look from where the low is, you can see you've got two very prominent highs up there. So you've got at least two lots of different retracement ratios. And that's what the market is saying to you. I know these numbers and I'm tracking them, or alternately, try another ratio. So that was the close we looked at. Close we looked at, have a look at the low of this big bar here, 115.13. 3 ticks, that's all. That's not even a human hair. 10 ticks on this scale is not even a human hair. 3 ticks above the red line. The market is talking to you and she is saying, I know these numbers and I'm tracking them. So if you saw the market yesterday, what was going to happen today? We had the little TO3 buy signal, 1 bar up. Remember that 1 bar counter trend is against the apparent trend. And if you're in a trade against the apparent trend, I suggest you get out of it as soon as you can. And the correct exit for a counter trend trade is FPC, which stands for first profitable close, or first profitable open if you like. They'll be much the same if you're not looking at the chart. Then you had a flip me sell that got you short again, and that's what we were talking about with that blue line. And it was sitting there, the last chart I showed you. And the question is, what was it going to do today? Well, have a look at it. I've shown you that this number was on this chart for a long, long time, 114.29. And the low today was, 114 correct 29. Exactly. 0 variance. Perfect target to target. And these markets do this all the time, and that is the market's way of talking to you. And the market is saying, I know these ratios and I'm tracking them. And you'll see as we go through, when it switches ratios, it tells you. It says, not this ratio, try another ratio. And that is a wonderful, wonderful thing, to have the market as your best friend talking to you pretty much all day and every day. And to try and show you how absurdly perfect all of this is, we're looking at the US Treasury bonds, UST bonds, the biggest single market in the world. It's just amazing how much of this stuff is around, but holds its value, of course, because the end value is guaranteed by the US government. And it pays interest as well, even better, isn't it? So this is the June 2024 contract. And you can see right at the left of your chart, it starts with some dots and it's got some green slashes above and below them. That's a tool in Trade Navigator that highlights gaps, which is important for your trading. But what we're looking at here is that first low, which is just made up of dots, is early November 2023. And I know almost none of you have ever seen this chart in that form at the beginning, because you probably take the view that you look only at the front month, and this was not the front month at the beginning, of course. And you also take the view that the dots and dashes mean nothing. Those of you who regularly come to these webinars will understand some time ago, dots and dashes actually tell you everything. They are real price movements that are largely ignored by everyone, which is kind of stupid. Anyway, let's simply take what we've got now, that we know that the dot, the lowest dot on the left is the low of the major swing, and we know that the high of that swing came in on December 27th, 2023. And what I've done here is I've just slapped on the Danielcode retracements from the true high down to the true low. And they're all on there. And I've also added the 14.8 retracement, which you don't see very often. All right, so have a look at all these numbers here. 1, 2, 3, 4, 5, 6. What those numbers are is the bars which are giving me that target recognition against the numbers. So the first one where the number 1 is, you can see that's January the 4th. And the low of that bar was 122 correct 22. Where's our red line? You can see there it's 122 correct 23, 1 tick variance. That gives me target recognition. The next bar down, which was January the 5th, the low of that bar was 121.16. Where's our red line? 121.19, 3 ticks variance. 3 ticks is nothing, just non-existent, less than a human hair. That is target recognition. Then we get a nice little rally there, and you can see that high. Now remember, these numbers are put on ostensibly to show support, but because they're Danielcode numbers, they show resistance as well. This is the DNA of markets. We haven't created these price levels. All we've done is feed in Daniel's code as percentages. That's all we've done. The rest is created by the market. And the high of that little rally bar there was 123.09. Where's our number? Look across to the left, 123.11. 2 ticks variance. Down we go. This market starts running down, and we get to recognition point number 4, the close of that bar. You're going to get sick and tired of me saying this, but don't take it lightly. This is possibly the most important stuff you've ever heard. Just really bear with me. I know it's repetitious. It has to be repetitious because that's the nature of Danielcode. But that bar there where the number 4 is, the low of that bar is 120 correct 20. Look across to where your number is on the left. It's 120.22, the same 2 ticks variance, which is nothing at all. Now, this market goes down further, and you get a key reversal bar under which I put the number 5. The definition of a key reversal bar, incidentally, folks, is a bar that this is a buying key reversal bar. There's buying and selling key reversal bars. A key reversal bar is a bar that opens within the range of the previous bar, goes down and makes a new low for the move, then reverses and closes above its own open and above the previous day's close. Now, in days gone by, before we had the Danielcode, it was generally considered that KRB's, key reversal bars, were important directional indicators. They're not anymore because the Danielcode time cycles have simply swamped them. But they are what they are. It's sitting there. Look where it put its low. It might look random without the Danielcode numbers on it, but look where it put its low. The low of that bar, the KRB bar, is 119 correct 9, 119 points and 9 ticks. Look at your red line to the left, 119.08, 1 tick variance at the low. Ridiculous, isn't it? That's what happens. Up it went, 1 bar up, 2 bars down, and at level number 6 I put there the next lot of target recognition. That low is 119.06, and you can see to the left the number is 119.08. It's that same 2 tick variance again, That's all. Quite extraordinary, isn't it? Okay, let's move on. And here we are looking at, we've got to the stage, we've had the first rundown, and we're now looking to correct the swing. And to do that, we simply put on our Danielcode retracements from the true low to the true high, and look at these numbers as they start running up. The first one, the first little rally up, if you like, had a high of 120, correct zero. Look at the red line, that's the 14.8 red line, 120, correct zero. Zero variance, absolutely perfect target recognition. It moves up, and I've got another number up there too, and that one has a high at 123, correct 4. Look at the red line. 100. Have I given you the right one? I might be not. Oh, that's the big bar. One too early. Must have got excited about all this wonderful stuff. 121, correct 17. There's your number. 121, correct 19. 2 ticks variance. Then you get the big push-up bar, which has a high of 123.04. I've marked that as target recognition number 3. And you can see beside it, the red line is at 123, correct 04. Folks, you can't make this stuff up. It's amazing. Now, that retracement is put on from the low to the high. Notionally, you would expect it to only create support, but it is Danielcode, so it does magic. Have a look where I've got the number 4 there. The first big push down is the low. Is at 120.00. That's all it is. Look where that low, I'm on the wrong one again, 121.19 is that low. 121.19 is the low. Yet 121.20 was the actual low of the big bar down from the high. The very next bar had a low of 120. And it is just sitting exactly on 120.00, as you can see. Then the rally back for 6, where did it go? Pretty simple. The inside bar of the rally closed for the day at 121.04 against 121.02. There's that exact same 2-tick variance. So this market, this chart is running at 0 to 2-tick variance. It's extraordinary, isn't it? And what you have to do now, we're happy with the previous chart because we had target recognition before the high, which gave us the turn at the high. But if you wanted further information or detail, add the blue lines. And you've got a blue line sitting there at 124, correct 22. What was the actual high of that bar? 124, correct 22. Are you all falling over laughing now? I am. This stuff is just so magical. I love it. I love it. I can't stop looking at it. It is so brilliant when I tell you markets are rational, orderly, and sometimes predictable. You're seeing that now. You're seeing that today. This is time and price combined. And as you know, when time and price are squared, a turn is almost inevitable. It's very, very important stuff. Keep moving along. I don't want to bore you with it. So we've done all of that. Now, what you've been trading in this whole section up till now was not the front month. This was just an obscure future month. It wasn't even the near month at some stages before the first contract rollover. Have a look at it. It becomes the front month on February the 28th. All of this wonderful price action, marvelous target recognition, perfect expansion and contraction to the Danielcode numbers was happening in a market that was not even the front month. You hadn't even looked at it. That part of it, because it doesn't become the front month until February the 28th. Amazing stuff. Okay, I'll stop saying that. So, if you want to learn this stuff in detail, what you need to do is take the Danielcode tutorial. We've got two of these wonderful guys with us that are featuring on this little interview here. The first is Mark L., who's a master trader. He lives in the States. And he said, and you heard him on his own interview, he said, I have said it before and I will say it again, the Danielcode and John Needham have changed my life. And Mark L's with us today. Also with us today is Greg Palladini, who's a master trader. He's also a wealth manager in California. He's a wonderful guy. He's been a Danielcode member for a long time, and he did his first tutorial in about 2014-15. He came back a couple of years ago to do another tutorial to learn trading time, creating and trading time signals. And he was so incredibly generous. Not many people would do this, but he said, I'm going to post everything good or bad that I hear about or learn in the tutorial. I'm going to post that in members forum at the Danielcode website so everyone can read it and learn from it. And it's been a wonderful, wonderful gift to all our members. We're most grateful to Greg for doing that. And you can click on forum, find the thread. It's a bit down now from the high, but it's a thread that says Danielcode trading tutorial or something like that. So thank you to both those gentlemen. They're with us today. They're great Danielcode supporters and great friends. Wonderful stuff. So creating and trading time signals, I've used the colloquial here to say it's the big banger. I want to get through to you how astonishing creating and trading time signals are. And you've heard our members saying they made 500% on margin with paper trading, 700% on margin. Mark L, over 1,000% on margin. It should technically be impossible, but with Danielcode, it's not. And I can tell you, I was the first to say you can't believe those numbers, but they're proven, and we've had multiple members getting the same results. It's a wonderful thing, and you can only learn that stuff at the Danielcode trading tutorial. So email me, jneedham@thedanielcode.com, and we'll get you lined up for a tutorial to learn Danielcode time and price trading very, very soon. Okay, we're back now to, let me see here. I'll come back to the questions, guys, later on. I know I missed questions at the last session, to which I apologize. I will come back to just go through all of your questions there. Okay, so these are time signals. You've got a time sell at the top, a time buy at the bottom, a time sell at the top. They're not the only signals, incidentally, but I just want to show you how perfectly all of these things are. And that target recognition at the high at 24.22 and the high was 24.22. It's just wonderful stuff, isn't it? Okay, so have a look at the dots down here. I showed you previously where the dots were connected. So I'm sure most of you look at this chart and you see the dots there before there was enough volume to fill it in, and you say that's nothing. Well, it's not. It is everything. That is actually showing you the swing low, the dominant swing low at the early part. And those dots are important. I've actually done a couple of tutorials where I've just taken the dots and more dots than that and shown you pretty much every swing high and swing low in the S&P. Go back through the tutorial. It was a number of years ago, but the dots are important. Okay, so here we are with the talking continuing. And now what we've done here is we've put on some of the blue lines. And what do they show us? Well, you can have a look straight away at the first two lots of target recognition. That first down bar with the number 1 on it is actually January 5th. The low of that bar was 121, correct 16. There's the blue line, 121, correct 21. It went through it a little bit. Really? What's the variance? That's 5 ticks variance. That's nothing. That's not even a human hair. Very next bar, actually, that little inside bar, its low is 121.22. Why is it doing that? It's sitting right on the blue line. That's the market's way of saying, sorry, I went through it a little bit, but I know that number and I'm tracking it. It's exactly why that bar's there. That's exactly what it's there to tell you. And 3 bars later, the outside bar, which is January 11, that low was 121.23, 1 tick above the blue line. 2 ticks, I'm sorry, that same 2 ticks. The market tested that number from the high and reversed. Wonderful stuff. Go down until you get to the number 3, which is the low. That is not a key reversal bar. Interesting for your information. I think it was Jim who asked about the key reversal bar, and I'm going to talk to you later, Jim, but this is actually not a key reversal bar, bar number 3, which is January 25th, 2024 on your Treasuries chart on the June contract. That is not a key reversal bar because the open is not, excuse me, within the range of the previous bar. It's below the range of the previous bar. But it does everything else right. It makes a new low for the move. It then reverses. It closes above its own open and above the previous day's close. So what you've got is a fake KRB, but it acts just like a real KRB. It has that same dynamic push-up effect that you'll often see associated with key reversal bars. This is an important key reversal bar in particular because it's sitting right on the blue line, and off it goes. Move on to what you see as bar number 4 there, and it's just after the big outside bar, so that's going to be February 14th. The low of that bar was 117.27. Look at the blue line, folks. 117.27 exactly. Then it has a little 1 bar rally up. The close of that 1 bar rally up is 119 correct 0. Where's our blue line? 118 correct 30. There's 32 ticks in a point for Treasuries. That is a variance of just 2 ticks at the close. Remember, target recognition is valid at the bar, high, low, or the close. Most important. Market then goes down, and it pretty much sits on its Danielcode number. Its low is 117.27. You can see the blue line, 117.27. 0 variance. But it's not convinced about that, and it then spends 1, 2, 3 more days trying to find what it thinks is that last level of support. And it does that on the bar I've got numbered 6, which 3 days later is February 21st. And the close of that bar is 117.27. What's our blue line again? 117.27. Amazing? Yeah, it is. Extraordinary stuff. Have a look what happens if this market starts to rally up. And these are not the correct numbers for a rally up. These were put down to find support for a run down. Bar number 7, which is just a few bars before the high of this next move, it closed at 120 correct 19. Where's your black line? Your blue line, I'm sorry. 120.18. 1 tick variance. What about the next day? The very next bar going up, 121 correct 23 against 121.21. 2 ticks variance. The market is saying to you, I know these numbers and I'm tracking them. The very next bar, which gives us the high, closes at 121.25. It's now at 4 ticks variance, which is nothing. That's target recognition. Perfectly perfect. 0 to 4 ticks variance is nothing. Okay, let's keep moving because I've got a whole lot more to show you. This, which swing will it correct? The market will actually tell you which swing it's going to correct. You can see here there are 2 possible swings that are the dominant swings to correct. There's another 3 or 4 other swings hidden in there, but I've just gone for the dominant swings because I want to show you how the market does this. And you can see here, there's your low. Put on your red retracement lines that run from the low. We're talking about the low on February 22nd all the way up to the high which is back in December 27th, 2023. Put that retracement on and then look at that first outside bar. It wanders around a bit, it gets a little bit of steam up, it gets the start of a rally. Now it's having a think, it doesn't quite know where it is. So it has its outside bar there, it has a red inside bar first, followed by an outside bar. And the low of that outside bar is 118.06. You can see if you look across to the line at the bottom, it's at 118, can't quite make it out. Anyway, it just punches through, doesn't it? It punches through that one at 118.14, maybe not there. Anyway, off it runs, but that's telling us which swing it's going to correct. And at this stage, it's correcting the minor swing. You can see there are two swings, a minor swing and a major swing. It's correcting the minor swing, that grey line, is sitting in there with a high of 119 caret 21. You can see that line's a bit, it's hidden behind the bars. I know it's hard to see, I apologize, but it's at 119 caret 17. 4 ticks variance, nothing, not even a human hair. That's telling you that minor cycle, which are the red numbers closest into the bars, the bigger swing, the numbers are the ones further out. It's telling you that to start with, it's going to correct that minor swing. And that's exactly what it does. It has a decent big bar up. After that, straight after that inside bar, it has a runs straight up. Where are we looking at? Am I on the wrong part of the world? Here I am. Runs up. And it finds its first target at 120.03. It then goes on, and its next bar, it finds its target recognition on the close, which is 120.19 is what that close actually is. And you can see there's a Danielcode number there at 120, correct 20, and beside it is the major swing showing 120.19. So this market's doing what many markets do. It's switching between the minor cycle and the major cycle. Eventually, it resolves itself by having this next bar before the high, and that bar has a close, or actually has its high at that 121.23 number against 121.22, and you get that 121.22 on both the minor cycle and also on the major cycle. Now, you've probably been taught that where you get a confluence of support and resistance, like you get the same or similar number from two different swings, that it is more important. That is not true. I know it's commonly taught that way, and it appears as if it acts here, but it is just not true. Why you get that confluence of numbers is because all market moves are fractals of previous moves, and as we are using the same Danielcode ratios for all market moves, it is simply a mechanical function that two or more of those numbers will finish up sitting on top or very close to each other. Anyway, in other words, we move along and we get to that high, which is at 122.13 against the number at 122.15, 2 ticks variance, that's all. Perfectly perfect. Same thing, we run down now and we get back into our red line there at 119.14 is the close of the low bar. Then it starts its next rally up, goes all the way up to 120.19, giving you target recognition on the way. Okay, let's see if we've updated this chart. We've been looking for a long time. Yap. This market just keeps talking to you and talking to you and talking to you. Have a look at those numbers, 1, 2, 3, 4, 5, 6, 7, and 8. They all give you almost perfect target recognition. The ones that have got the C underneath it, they're showing it to you target recognition on the close as opposed to the high. Yap, yap, yap is right. This wonderful friend, the market, doesn't stop talking. Every day she's saying to you, I know these ratios and I'm following them. Now, you can expect to hear the market talking every 2 or sometimes 3 days. If you go more than 3 days without the market giving you target recognition and telling you about it by saying, I know these numbers and I'm tracking them, the other side of that is not these ratios, try a different ratio. What do I mean by that? Well, you can see here we've got on the retracements for the minor swing and the major swing. And sometimes she's following the minor swing, other times she switches to the major swing. Dominance here with the minor swing until you get right to the top, and that actual high is the one that 3 or 4 ticks off the major swing at 122.15. With the high of that bar for the day being 122.13. Same thing, 2 ticks variance. On and on it goes. Okay, let's keep going with this, folks, because I have much to tell you, and guess I'm going to bore you. Here's the next swing really quickly. Have a look at the 1, 2, and 3. They're just absolutely knocking over these Danielcode retracement lines at a very high speed. Let me adjust this chart so I can actually see a bit better. Here we are. So this is this run up to this minor low, which has a DC time signal right on top of it, of course. And the bar that's numbered 1 is the 22nd of March. The one with the number 1 is the 22nd of March. The high of that bar is 120.05. Where's your red line next to it? 120.05. Is that right? Absolutely. Then you have a little pullback the next day. What does it do there? It goes down to 119.06, but its close. Remember, target recognition is valid on the bar, high, low, or the close. Its close is 119.14. 1 tick variance against 119.13. Same thing. Up goes the market again. The bar before the high, its high is 120.12. Where's the blue line? 120.13. 1 tick variance. That's the one with the number 3 on it. That's target recognition, and you get the time sell signal is created by that bar for execution the next day, and then you get a confirmation signal for execution the day after. Okay, I've still got a way to go. What am I going to show you here? Let me see. Time turns, you've seen that. I showed you that. Here's the next one. Oh, what happens tomorrow? I like this because this was a chart from Wednesday's trading. And you can see it got a little complex. We had perfect target recognition at the low, then up to the DC target recognition high, which gave us a time sell signal. 2 bars down, we got a target recognition at the high of that key reversal bar right at the bottom. The high of that bar was 117 correct 10. Where's your blue line there? 117 correct 9. 1 tick variance, if you can believe it, and you can. The next bar up from there gave you a close at 118.01. What's our blue line there, folks? 118.00. 1 tick variance. You will get to the stage you can recognize all this without even thinking about the numbers. It becomes a pattern that you will recognize seeing it if you do it often enough and long enough. So it's not complex. We create the numbers for you. We give you the red and black tool for yourself, but we create all these blue line numbers, which are fairly difficult to create, but they're very, very good, and that's why they're important. So then you get this outside bar down, which closed. This was Wednesday's bar. The close of that bar is 115 correct 25. There's a blue line number in there which is just off the chart, but it is, I think, 115.27. And then the question was, with all this lovely target recognition, we had certainly had target recognition. I'll put that on the link on there. If I can find that number for you, but it's off the chart. I can tell you exactly what it is. Stand by. Here it is. 115.20 is the blue line off the chart that you can't. Well, it's there. 115.20. I must be going nuts. It's immediately below the one that you can't see. So the one above that is 115.26. That was it. 115.26. The close of that big outside bar was 115.25. One tick variance. The question was, what will happen tomorrow? Look at the next couple of blue lines down below it, folks. Here's what it did. The next blue line below it was at 114.29. Today's low was 114.29. I mean, do you get it? These numbers have been on this chart for weeks and weeks. Some of them have been on this chart for months. Some of these blue lines come straight from that first high you saw after the dots, the first rally high. And markets are doing this all the time. All markets do this, not just T-bonds. All markets are bound by the Daniel Code. They're ruled by the Daniel Code. It keeps doing this again and again. And surely, if you know this stuff, it must be the most precious gift of your life, because you can go to your gold mine, dig up a pan of gold whenever you feel like it. It'll be there for you always. Even on the 6-day charts. Have a look at this. This is a 6-day chart of gold. Every bar on this chart is created from 6 trading days. And this market ended today. It ended that particular bar 8 ticks variance from a target on a 6-day chart. 6 days in every bar. You would think it would be all over the place, wouldn't you? And it's not. This is the S&P on our 6-day chart. Most serious traders will start by looking at the 6-day chart before they go to their daily chart. If you would like to have these 6-day charts, you can subscribe for them. Just get subscribed to the Daniel Code Super platform, and these charts are sent out by email twice a week, sometimes more. There's the S&P. Where did you get the closing high? 7 ticks variance from target. Here is US Treasuries today. This big bar down will close after tomorrow's trading. Have a look at those numbers. Be interesting to see how close it gets, either at the low or the close. It's pretty close on the low now. It's got one more day of trading to go. Okay, folks, if you want to be a trader, I suggest that you read or you listen to these videos. There's 3 of them. They're on the Daniel Code homepage. Video 1 is from Mark L. I've said it before, I'll say it again. Daniel Code has changed my life. Video 2 is from Justin from the Hunter Valley, who's with us today. Justin, grand to have you with us, my friend. And I hope it stopped raining down there. I know it's been rough. Video 3 is from Scott and Amy from Boulder in Colorado. Their client, it is much more fruitful for you to listen to what the clients have to say than what I have to say. I can say anything. The clients will tell you in detail what they've done, what they've achieved by learning their Daniel Code tutorial. So don't waste any time. Email me now, jneedham@thedanielcode.com, and we'll get you scheduled for your Daniel Code tutorial, which will teach you to do exactly what you've seen me doing today. Okay, so here we are, got a couple of questions. The first is from Jim, and it's on the S&P. Just let me get that up, Jim. There we are, S&P, ES, here it is. Yep, key reversal bar today, you're quite right. Classic key reversal bar today. Old timers would say that is a directional indicator. It's not as powerful as it used to be, but it still can be valid. Quite right there. Now, this is from Arupam. How do you know which line will be high-low between blue and red? It will get there. It will find the number and has to find it with such high level of exactitude ARAPAM, 0.1%, not 1%, 1/10 of 1%, or less. As you've seen, these are typically just a handful of ticks away. It tells you which market, which bar it's following, and which swing it's following. And if it switches to a different swing, it'll tell you that as well. Okay, so trading view as trade nav is in decline, says Andy. Absolutely, much very. It's disappointing, isn't it? Very disappointing. And I'm unhappy as you are. Okay, so if you haven't already, folks, we've gone a few minutes over time. Do get your free trial, and any problems, contact Terry at support at the Daniel Code. And as well as that, we need to show you our disclaimer. It's real. Don't trade money, real money, folks, until you are confident that you're a competent trader. And the best way to become a competent trader is do the Daniel Code trading tutorial. Email me now, get in the list as quick as you can. That's it for today, folks. It was an extraordinary, long and difficult webinar for you to probably have to concentrate and look at, but it is so magic. It is, I mean, there's no other word for it. It is so amazing. It is so magic. It is so sensational. It's one of the great, great wonders of the world. And hardly anyone knows, as I say, the greatest secret never told, because we don't advertise. You have to find us if you want to. Okay, and that's us. Thank you so much for being with us. And Jeff enjoyed it. Good on you, Jeff. Thanks, my friend. Glad you're enjoying it. And thank you for being with us, folks. I will look forward to talking to you again in a fortnight, which, as Mr. Greg he's a wealth fund manager between Colorado Springs and Texas, we're never sure which. His son knows what a fortnight means. Apparently it's not used at all in America, that expression. And a fortnight is probably a British expression. It means 14 nights. In other words, a fortnight is 2 weeks. And we do these new webinars every 2 weeks. If there's something particular you'd like me to talk about, please let me know. jneedham at thedanielcode.com. If you'd like to get started on your Daniel Code trading tutorial, jneedham at thedanielcode.com. If you'd like to talk about it, just send me an email and we'll set up a go-to meeting just to have a chat about your trading, your aspirations, what you've done, where you'd like to go. And if you've done nothing at all in trading, that's fine. It means we don't have to get rid of the bad habits that you probably built up from other courses. It's a pleasure. Great being with you, and I'm glad you enjoyed it all. Enjoy your weekend. I'll be with you again shortly. Bye-bye for now.